said that we should be starting at 12 o'clock, but we are a bit delayed. Allow me to just first and foremost greet you and welcome you. Good afternoon, everyone. My name is Pinyas Mutota. I'm the outgoing chairperson of the NMC Fund. And allow me to welcome you once again to this AGM. As you know, this is an annual general meeting. We will send out an invitation for the members to attend the meeting. I just want to confirm that we are also streaming live, and we also have members that have joined online, right? Allow me to apologize for the delay. We needed to ensure that we have a quorum, that we have constituted a quorum for the AGM to proceed. So this is in accordance to our rules of the fund, that we need at least 200 members to constitute the meeting, but you will get more details from Joanne, our PO. But I just want to take you through the agenda. But as part of the welcoming, I would like to extend a special welcome to those members that made time. I'm sure and I know that you are busy, but you have made time to be with us today. Equally, I would like to thank the service providers that have also made time to be with us. This is very important for us. We also have the consultants in terms of our investment consultants that gives us advice in terms of our investments, the actuaries, the regulators. I don't see Namfisa here. Oh, Namfisa is here. Okay, the regulator is here. Is Namaf here? No. They're not here. Yeah, and everyone in your special capacities. You are a stakeholder to the fund, and you are one of us. Once again, thank you very much. You will note on the agenda that you find on your seats, we have a very short agenda, contains about 10 or 11 items. Just briefly, Joanne will then take us through. Joanne is our PO. Joanne will take us through the constitution of the meeting. We will have then the approval of the previous minutes of the meeting, our 2023 AGM minutes. We will then have a report just to give you an overview of how 2023 looked like and how the Board of Trustees sees 2024. That will be done by myself, and then we will have Madam Anna Ngome, who is going to do the report from the administrator's side. We will have an investment overview. Kwabes will do that for us, just to give us in terms of how our investments are doing and what is the impact, and therefore we will then have the presentation of the annual financial statements for the period ended 2023. Our financial year end is December each year, and the financial statements have to be approved by the members. So the Board of Trustees' responsibility is to present it to the members at the AGM, and you as members will then be expected to approve those financial statements today. I'm sure that Carleen will then inform us how the process was and what was and how the financial statements were made accessible to the members. We will have another presentation from Ben, our financial manager, the fund's financial manager, the fund manager, sorry. The fund manager will then present the the remuneration of the Board of Trustees, and we will have other matters. As per the rules again, other matters must be submitted to the fund 14 days prior to the AGM. The reason why we're doing this is because we want to give those that have to deal with these issues enough time to come with enough and sufficient information so that we can address the issues. So those matters that were then presented or submitted, we will then give feedback on the issues. Of course, this is now also a special year for us because the current board, as I've introduced myself, that I'm the outgoing chairperson of the current Board of Trustees, is coming to an end, the reign of the current board. From today, after this meeting, we are going to have a new set of Board of Trustees who's going to give leadership and direction to the fund. And so at the end of the meeting, we will then be announcing the results of the elections. I'm sure you are all aware that we've been running these elections for some time now. We have come to the conclusion, and we are happy and excited to announce the new members. We will have, just to show you the results, we will have Deloitte. Alseco is here to give us just a brief overview of the process. And so that I hope that those that were nominated are all here so that we can see our new Board of Trustees. In a nutshell, ladies and gentlemen, that is our agenda for today. And without further ado, let me just then call upon Joanne to give us an overview in terms of how the constitution of the meeting. Thank you very much.
Brumi, where is she? Where do I find the presentations? Yes, please. I don't talk Apple, sorry. I talk PC.
You. So, should come on right now. So,
Perfect.
we'll have to focus on that one.
Okay. Good morning, everyone, and welcome to our AGM this year. Thank you so much for joining us. I understand we have members joining us from Walfish Bay all the way, and also from Riobot. Good morning, sisters. Thank you so much for coming. We appreciate you coming out this morning. Okay, so in terms of the constitution of the meeting, we did notices for the call of trustee nominations. We did those in the Market Watch of the Republican on those dates, the Namibian. We emailed it to all our members, and we also shared it on our social media pages on those specific dates to make sure that everybody knew that we were busy with nominations for new trustees this year. Then in terms of the notice for the annual general meeting, we did those notices as well in the newspapers. We also did it in an email to our members, and we also shared it on our social media posts. You'll see that we're really trying to communicate with our members, and I also want to just ask our members to join our social media platforms. We share very relevant information there, and we engage with our members on a often. So please make sure to just subscribe to our channels. It also helps you to just keep up to date with what's going on with the fund. And then please also just make sure that your contact details are updated. It's very important for us to be able to be in communication with you, and we can only do that when we have your most updated information. Then in terms of the trustee nominations, what we did this year is we made a short list of nominations because we want certain skills, or certain skills are required for the Board of Trustees to be able to effectively manage the fund. So we made a short list, and once that short list was available, we also communicated that in the newspaper. We communicated it on our social media platforms as well. Okay, then the downloads were available from the 18th of June to all our members. This included our annual financial statements, as well as the board pack that you've received this morning with all the relevant information. So with these notices, I then confirm that this meeting is constituted in terms of notices. In terms of proxies, we need 200 proxies for the annual general meeting to take place. This morning we have 36 members in physical attendance. We have 30 members online. I think it might have increased a little by now. And then we have proxies, and in total we have 338 members in attendance via proxy or online. So this meeting is then declared constituted. Thank you very much. I also just want to say thank you to Namfisa for being here this morning. Rachel, thank you very much. Also to EY and Deloitte, to our investment consultant, Mr. Kobus Kraus, Moeneni from i3 and Irenaeus. Also our administrator, the EXCO representatives and some management, also those that helped us this morning. But most of all, thank you so much to all our members and also TBWA for helping us and making this possible. We do appreciate all your efforts. Thank you very much. I don't know how to work this thing. Thank you.
Thank you very much. That one is not my presentation.
Excuse me.
I don't have a presentation.
Oh, you don't have one?
No.
Oh, okay.
Ladies and gentlemen, thank you very much, and thank you, Joanne. Maybe just to just maybe also, what do you call it, household matters. Joanne is our new PO, but she's no longer new. She's been appointed since last year. I don't know if Joanne, last year when we had the AGM, she was not the PO. You will remember that Alison was our previous PO. She went into retirement. The Board of Trustees then appointed Joanne as our capable new PO. So allow me just then to introduce Joanne to everyone. Please, she's your new public officer. And anything that you are then grappling with, clarifications, please feel free. But in addition, I also maybe just want the colleagues from NMC to stand up so that the members can also then see you. It's important that we see who is actually then behind the office. That is the full office of NMC. Okay. So that is Jessica. She wanted me to mention her name specifically. And Ben and Zurika. So you might have interacted with them, but that is the team behind NMC. And I normally get questions as to NMC and MedHealth. NMC is the fund, it's a separate fund, and then we have appointed an administrator, which is MedHealth, who's administrating the day-to-day operations of the fund. So those are our people that we have entrusted to manage the fund for us, and I just wanted you to recognize them, and also that you are aware of who is our PO, fund manager, and everybody else. So in terms of the agenda, we can then proceed to the next item, which is number 3, approval of the 2023 AGM minutes for those that attended the meeting. And as presented by Joanne, these minutes were also made available on our platforms. And in fact, the 15 minutes that perhaps we delayed a bit, you could have used a bit just to go through the minutes and make sure that we captured everything. Is there anything perhaps that you have noted in the minutes that was not discussed or was not that is not well represented from the meeting. If not, can I then request that we then approve the minutes of the 2023 AGM minutes? Any proposal from the members that, yes, Beth, approval? And even if we have an approval from the online, we will appreciate any approval from for the minutes. Yeah, Beth, you moved for the approval. We need now somebody to approve.
I
Okay.
have a question before I approve. There was a question because of my heart condition for a broader spectrum of care in certain illnesses, but it's not mentioned in here. I did request it. It's because I'm suffering from oxygen.
Yeah, your question was submitted, right?
Yeah.
Yeah, so that is also
I
then.
don't see the answer in here.
Yeah, because it was not answered immediately there, right?
No, Mrs. Bailey says she will speak to the NMC members and revert back to you. She never came to an answer.
Okay. So with that, correction, can we then just make sure that that is also corrected, that the questions that were raised, Ms. Okay, that it was then promised that we will get back to her, but then of course we will need to deal with the matter if that did not happen.
Thank you.
That's fine, colleagues. Can we then move for the approval with that addition? Ms. Carroll, you said for you to move to approve, right? Okay. Can we confirm that the minutes are approved?
Yes, sir.
All right. Thank you. Thank you very much, ladies and gentlemen. Then allow me then just to give you an overview of the performance of the fund over the past 12 months. This is the period from 1st of January 2023 to end of December 2023. I'll also give you an overview of the fund's intention or vision in terms of what we want to do in 2024. The financial results for 2023 showed some improvements compared to 2021 to 2022, despite continued high claims, but with less volatility. Investment income surpassed expectations, which contributed to improved reserves and solvency ratios. Claims in 2023 exceeded projections by 1.14%, partially due to a 2.4 increase in membership from former BankMed, Namibia Medical Aid Fund members, and of course new members who joined the fund. The expenses ratio, this is the ratio in terms of how we are spending the fund's money. The expenses ratio decreased to 8.52% of the total contribution in 2023 from 9.1% in 2022, below the open funds industry average of approximately 9.98%. Additionally, the fund has maintained an expense ratio below 10% for over a 5-year period. Contribution increases for 2023 and 2024 were 9.85%, and we are expecting a 9.9% respectively for 2024. However, the fund experienced lower than expected claims in the first and second quarter of 2024, potentially due to effective risk mitigation strategies. NMC trustees' current financial objective is to recover the solvency ratio to 30%. Other strategies of the fund to recover its reserve level and ensure the future sustainability of the fund includes industry reduction of the additional hospital benefit from the 200 to 150%, industry reduction in medicine markup from single exit price of plus 50% to 40%, reduction in non-health care costs such as administration fees and other services providers, or at least maintaining the same costs, member education initiatives to help members understand and how the fund operates and how it works, and enhance preventative care initiatives that the fund is also encouraging for the members to take up. The fund is cognizant of the fact that adjustments in some of the above mentioned benefits have a direct impact on members, but it is the responsibility of the trustees to ensure a balanced approach to benefits and contributions to ensure a sustainable fund for the benefit of all members. Dear esteemed members, prioritizing stakeholder engagement is vital for sustainability, along with adjustments in benefit design to address evolving healthcare needs, particularly concerning the aging membership profile. Allow me to inform you that the Board of Trustees has put in place a 3-year strategic plan for the fund for the period 2024 to 2026. And it is our vision to create long-term sustainable value for our members' health needs, and our mission is to provide members access to private health care. The above mentioned is our plan to ensure that the fund remains relevant, that the fund is sustainable, affordable, and responsive to members' needs. The fund will initiate different activities and programs to meet the strategic objectives of the fund, and we are confident that the members will support the Board of Trustees and the management. As this will be my last AGM as a trustee and a chairperson, as I've indicated, I would like to take this opportunity to thank my fellow trustees who have given their commitment and time to the fund in ensuring the continued existence of the fund while protecting our members' interests amidst challenging times. It takes tremendous effort to serve on the Board of Trustees, and the outgoing board has been diligent, responsive, and tireless in its pursuit to ensure that our members belong to a fund they can count on and be proud of. I wish the outgoing members or trustees only the very best in their journeys. Thank you for your support, input, and dedication. I would like to mention that it has indeed been a privilege and an honor serving with you and those that are in absentia today. The saying that it takes a village has never been truer than in these turbulent times. And I also wish to thank our administrator, auditors, actuaries, investment consultant, promotion and advertising agency, health professionals, service providers, the regulator, NAMFISA, NAMAF, the NMC staff members, and more specifically the members of the fund, for bearing with us and supporting us during our time of need. Everything the fund does and every little difference it makes to a single person in Namibia is only possible because of you, all of us. I will remember my time as a trustee and the chairperson of NMC fondly. It has been a privilege and a pleasure. Thank you for trusting me with my fellow trustees with one of the most important things in life, your health and the health of your loved ones. To the new board of trustees, they do not know themselves yet, but those that were up for nomination, just please take note of this message. You have been chosen and entrusted with our members, by our members, to take care of them. The fund belongs to the members. I have every confidence that you will be committed to this journey and that you will apply your minds, qualifications, and experience to the best of your ability. I wish you all the best and entrust you with the responsibility of ensuring that the member remains at the center and the heart of our fund. Ladies and gentlemen, that is my report, and those are my remarks. And once again, thank you very much. Yeah, it's a bit strange when you are giving a remark and then you are also the director of ceremony. Do you ask for people to give you another round of applause? Very good. Can I then call upon Madam Anna Ngome to give a report from the administrator's behalf? Thank you very much.
Good afternoon, ladies and gentlemen. All protocol has been observed already. I will be giving the administrator's report on behalf of our CEO, Mr. Florian Amlungu, who could not be here. In 2023, the Namibian medical industry experienced notable trends and developments, mostly driven by the COVID pandemic, as well as economic conditions that were observed globally, regulatory changes, and ongoing health challenges. The Medical Aid Fund specifically in Namibia face challenges pertaining to rising healthcare costs, as well as economic strains that we are all aware of, especially what we see on a daily basis within the country. While the year presented its share of challenges, I would just like to thank our dedicated team, the Met Health staff, for working tirelessly to overcome and to ensure the fund's sustainable growth and resilience in these challenging times. The regulatory and industry efforts aim to ensure the financial soundness and solvency of the fund, protecting the interests of the members and ensuring continuous access to healthcare services for the NMC members. We would also like to extend gratitude to the to the Board of Trustees, the PO, the NMC staff, and members and service providers for their unwavering support and trust. Your confidence in us drives our continuous pursuit of excellence, and we are committed to continuing our journey of growth and innovation. We are also excited to achieve new heights with your continued support. We look forward for your continued partnerships as we navigate the future together, and together we are poised for promising year ahead. So I had to read the CEO's report verbatim, and in addition to that, as the administrator and on behalf of the Met Health Management team and the CEO, we would also just like to thank the outgoing Board of Trustees, the Chairman, for your tireless efforts and really having the members' interests at heart, and showing that in the dedication that you've showed over the past term. In the same vein, I would also like to congratulate the new Board of Trustees and the incoming trustees, and I would like to wish them all the best in their new term. I would also then lastly like to thank all our staff members as well as our stakeholders for their hard work and dedication in the past year. Thank you very much.
Thank you, Anna. Thank you very much for those words, and apology from Mr. Mulungu is noted. We then proceed to the next item, which is the presentation from the actuaries. It's going to be done by Mweneni. Can we please give her a round of applause while
Is the minority?
Thank you, Chair, and good afternoon, everyone. We'll be taking you through the actuarial valuation, the actuarial review of NMC, which is mainly looking at the fund sustainability over a period. So with this, I will then be looking at what happens in the past and the focus into the future, like where we see NMC going. And I think what we have already had in the earlier presentation from the chair and the earlier speakers, and I also highlighted that it have been a challenging year, and if you follow the media, you probably see every now and then you have a headline about the status of the medical aid industry in Namibia. This. Okay. I hope it should be audible now. Okay, thank you, Joanne. So what we have been seeing in the media lately is the state of the medical aid funds in Namibia. This article is from the Republican of Wednesday this week, just highlighting the alert or what the medical aid industry is actually going through at the moment. And what it's saying, there is a highlight of 4 of the 8 funds in the medical aid industry are actually experiencing challenges, and in fact, one of the 4 is already in the process of being liquidated. And just an article there that says that 3 open funds, which is taking up more than half of the membership of the medical aid members, are experiencing solvency level that is below the 25%. The 25% solvency level is an NMC guideline of saying for a fund to remain sustainable, at least it should maintain about 25% of its annual contributions as a reserve. Now, just on the next slide, I'm just trying to put a bit of context in terms of what we are talking about in terms of the operations of the medical aid fund, or how it works. So we receive the contributions, though it is a members fund. I think the chairperson have just mentioned that it is members funds. It's not shareholding or anything. So it's members contributions that comes into the fund. It pays the medical bills. There is a portion that is also paid for non-healthcare expenses, which is now for the managing of your fund, your administrators, actuaries, and all the fund expenses. And if there is a surplus out of that for any annual contributions, then that is put into the reserve. And that is now the reserve pot that NAFISA requires, or just on normal operations of a medical aid fund to just remain sustainable, you should at least be aiming for a solvency level of 25% is a guideline for NAFISA. NMC historically have been maintaining a 30%, their culture have been to maintain a 30%, so we would want to at least continue maintaining that to ensure sustainability. And in years of where there is a deficit, where the contribution that is paid through to the fund is not sufficient to cover for all the expenses, then the reserve is then being fused to fund up the deficit, to fund your operational expenses and to fund the medical aid, the medical bills. And that is why the reserve is quite important to the fund. So just also to touch on to the other sustainability measures that we will look into in terms of determining whether the fund can be sustainable. So obviously your claim ratio, which is the ratio at which your members are claiming, the total payment medical expenses versus the contributions that we bring into the fund. So the aim at least is to keep that claim ratio below a 90% to also allow for your non-healthcare costs. The claim ratio of over 100% or over that actually means that you have a deficit. So then it's just important to actually measure that ratio as well in addition to your solvency. Solvency I've already mentioned, that's when you're looking at now the reserve that you can hold for the future. And now in terms of the costing, you then need to look at your aging, the other factors that actually have an impact on the premium versus the claims that you're claiming. Obviously, your aging is important because you would want to have a pool, because the whole pot is a cross-subsidization pool where you have your riskier members being compensated or being cross-subsidized by your healthier members. And it's not like I'm always the healthier one. Obviously, this year I can be the riskier one. Next year I will be the healthier one that is cross-subsidizing the other ones. So it's quite important that we have now that mixture of risk pool, which is also now driven by the age. So younger members will probably be interested in their specs, and that's the only claim that they make for the year, and then they subsidize the chronic medication for another aging member. So the aging is quite important, and it's always the first target to maintain a lower average age. Membership growth is also important. The more member you have in the pool, the more you share the risk. The tariff increases determines the increase in your claims. So whenever your tariffs are increasing, the fund also have to increase the contributions in order to continue funding for the expenses, because there is actually no other money coming from elsewhere except for the fact that whatever you bring in as contribution needs to fund your expenses. So we now need to ensure that there is a balance between those two. And those are mainly the factors that then advise the contribution increases on year, or the benefit changes. So normally when we have complaints of why is benefit X, Y, and Z is not increased, behind the scene is more of an assessment of can we afford this increase, because that increase comes at the cost. So one then need to continuously weigh the increase in premium versus the increase in benefits as well to create that balance in the fund. Okay, so just having said that, that's mainly just the background of getting that context of the operations of the medical aid fund. But that adds up to my earliest slide that is also part of the stats in the newspaper, where it's just tracking the medical aid fund over the past couple of years, mainly from 2010 to 2022. The first graph there is looking at the claims pattern. And interesting also to note, the lower line is the inflation. So the growth in claims, which is the purple line, if you're comparing that to the bottom line, you can actually see that the claims are actually increasing at a much higher rate than the normal inflational increases. And that will then also drive our contribution increases to be higher than inflation, because our claims experiences are not increasing at the same rate as your inflation. So normally when you have a question of why is my contribution increasing by 10% while inflation is at 5%, that also just clearly show some of the challenges with the claims growth that advise the increases in contributions. And the next one is for the solvency ratio, which is also now showing the entire industry decline. This is not NMC, this is just now the overall industry. So that is just to show how the solvency have been actually coming down all the way from the previous years. Of course, we have the COVID challenges that came through in 2021 that led to much of the decline. But at the point where we are now, we actually just need to reboot again and to ensure that the funds remain sustainable, because the current state of affairs is an indication that we actually need to rethink. And I'm glad the chairperson also just mentioned some of the strategies that the funds are looking at in terms of improving the sustainability of the fund. In terms of now NMC's fund statistics, and I think that is also just tallying in well to what I've said before and the newspaper articles as well, is the operation, the deficit that we actually experienced in the past 3 years. 2023 at least was a lot better, and which also was mainly saved by the investment income that has been received from the surplus. The surplus that were invested actually gave us a good return. So in the end, the net we had the net surplus of 4 million, but that is mainly because of the investment income. But overall, the net contribution income that we have received was not sufficient to cover the expenses. We still remained with a deficit of 56 million, which is much of an improvement if you look at the past 2 years, but which is also just indicative of the need to actually improve the performance of the fund going forward. And the last line being our solvency, which is now the NMC specific. The previous one I was looking at the whole industry, and one can now see that newspaper article about the funds that are below the solvency at the end of last year. NMC is actually one of them, because we ended up with a 23.6%. So we're actually one of those funds that the article is referring to, and that is now below the minimum requirement, and we just need to then ensure that we pick up on that. I'll look at the forecast in my next slides, but I think just to capture the status quo at the end of last year. And that slide mainly summarizes what I was saying earlier, but comparing NMC to the rest of the industry. The dotted line in the slides, the industry, while the hard line is NMC. And the above line is mostly looking at the solvency, and we can, sorry, is it the solvency? Yes. So the NMC solvency being below industry solvency, and that is how it has been. We have always been below the industry, and the reason being also because there are also other funds that are targeting a much more higher solvency than what NMC is targeting, and especially for the open funds, which have lower membership, they will aim to have a much higher solvency ratio because of their lower membership, which is mean they have a higher risk profile higher claims for a few members can actually skew the performance of the funds completely compared to a bigger fund with a bigger size. But I think what is important to note is just the fact that the industry is all trending in the same direction, and they're all getting to the solvency of, I think at the end of December, the industry solvency was about 26.7%, while NMC was at 23.6%. So that is just the challenge that we have there. On the positive side, however, if you look at the expenses ratio, then we are actually spending less on expenses compared to the industry average. So the dotted line is the average of the industry. NMC have always been lower, and then there is also just a trend of slightly reducing that year on year. I think we have reduced to 8 point something. We were previously at 9.1. I think we are roughly around 8.9 or so. So there is a reduction in the expenses. So that's also just tell that the funds are also trying to ensure that they maintain a lower portion of non-healthcare expenses, and as much of the contributions continue being spent on the healthcare expenses. The membership, I'm not really going to get much into the details of that, but that is just to give an indication of how the membership have been growing over the years. Quite a good pickup in membership from 2022, and there is still prospect of growth, which is quite positive then to the fund, because that's really what we would want, to grow our fund to get a more bigger risk pool. And the more members you have in your fund, the more likely that you are actually attracting your healthier members. Because one of the challenges that we lately have in there is also the unemployment rate. The fact that younger members who were ideally supposed to come into the funds at a lower cost because they are more healthier, they are actually now sitting unemployed, and they are not part of the medical aid pool. And that have also now contributed to the stretch in the medical aid fund industry. So in terms of the benefit and contributions of the fund, I think Chairperson also touched on that. What is important to just note on the decisions around the contributions increases of the fund is the fact that it is advised by the different factors. Contributions is what we need to fund the claims. So what the contribution increases that the fund try to pass out it, at least to ensure that the fund remains sustainable, and the income that is receiving from each member should be able to sustain the claims. And there is where the funds always try to then create a balance on what are the benefits that we can offer, what are the ones that we can perhaps reduce in order to minimize our increases. The average increase for 2023 was 9.85%. 2024 was 9.95%, and that is mainly allowing for the increase in inflation, the fact that your claims are increasing, and then the increase in utilization as well. The utilization component have actually been coming out quite strong of late because of the increase in service providers, increase in technology. Members have more access to benefits than they usually do. The opening up of facilities at some smaller towns and all that have actually put up the utilization, and the use of technology, the new machines that the doctors are currently using. So that also contributes to the claims growth, and that need to be factored into the increases that we are passing across. But what is also important lately is also the fact that increase now needs to allow for the build-up of the reserve. So a portion of that increase that was granted for 2024 was actually to take us out of the deficit that we currently have been experiencing, so that the contributions that we're receiving from the members should be adequate to cover up for the fund's expenses. So that is mainly the drives in terms of the contribution increase that has been passed. And just looking at now the focus in terms of where we are at the moment and how we see the future, at least it looks quite positive that the claims for the first quarter of the year were 9% lower than what we have anticipated, with all the benefit management strategies that have been employed. It seems as that have to a greater extent helped the fund in terms of lowering those claims. It's however quite too early. There is still a lot of behavioral change and all the other factors that comes in. We continue monitoring this as we go by, but what we could actually highlight more was that the hospital cost is actually the one that came down quite significantly, and when your hospital cost is lower, then you also expect then your overall cost to be lower, because that is where most of the spending for your medical expenses are coming in from. So as it stands, it looks quite it's a positive prospect. When we were pricing for the current year, we were actually expecting the first quarter for the solvency to drop to 21%, but it actually is at 23%. And the focus for the remainder of the year is that if the trend continues, then by at least the end of the year, we should be able to bounce back to the 25% solvency level, which is the minimum requirement. And I think the recent figures year to date, end of May, is already start to showing that figure coming through. So if the rest of the year flows in line with the expectations, then we are expecting to end the year with a solvency that is more than the 25% minimum requirement. However, that doesn't really take us off the wood yet. It's still we are still at a quite concerning stage. We still need to continue ensuring that we maintain the measures and the sustainability measures that we have in place, so that we actually continue to increase our solvency and lower the claims ratio. And I think mainly with that, I've mostly touched on most of the points that I've already highlighted on there, that the outlook for the year looks positive compared to the picture that we had, especially at the time of the pricing, with last year being quite a very heavy year. If the claims and the members continue claiming at the current trends, we might then end up with a better solvency for the year, and we also then expect the fund to then continue remaining sustainable in the foreseeable future in the absence of any adverse event. So that was my story, Mr. Chair, and thank you, everyone.
Thank you, Mweneni, for the rundown on the numbers. That is what make up our fund. It's based on our contributions and then, of course, the claims to defray our medical costs. So I understand, or I do believe that you have an understanding, or at least a picture now in terms of where we are standing and how the fund has been performing. And the reasons why we are experiencing, of course, the increases in our contributions, and at least what our contributions go toward. So now, in speaking on the reserves is very important for the fund. It does assist the fund in times of need, and that's why there is actually a minimum requirement that is put down by the regulator. If we are bridging or continuously bridging the reserve margins, we will find ourselves in a position where we will not be able to meet our commitments, and then that's why you found that there was an article in the papers. But rest assured that the Board of Trustees is doing what it needs to do so that our fund remains sustainable, and we will then continue providing the services. So in terms of how our reserves are doing, this is where we come in with the investments, the investment report, just to understand where we are, what is the markets, what our markets are doing in terms of ensuring that our investments are either sustainable in terms of that they are growing, and what could be the impact in terms of in relation to the growth of our investments. So the investment is your savings for the rainy days. But without further ado, let me call upon our investment advisor, Kobes, just to give us a bit of a brief in terms of what is happening. Kobes, thank you.
Good afternoon, ladies and gentlemen, online and as said, all protocol observed. Thank you very much for making your time available this afternoon. Ladies and gentlemen, as the chairperson have said, and as you would have seen from Mweni's actuarial report, the investment portion of the fund plays a very important role in protecting the solvency of the fund and also contributing to the reserves in these adverse years that we can know that we can still meet our claims, etc. And the last couple of years has been extremely challenging. Since 2020, I mean, we went through COVIDs and pandemics that we've never seen before. So over the next couple of minutes, I'm going to try and unpack for you what had an impact on the fund's reserves, in other words, the economy, and then also what are the current challenges that we're facing, and then just end off with giving you some peace of mind in terms of what is the investment strategy that is being employed by the fund. And ladies and gentlemen, this is not only important for us as members of medical aid funds, but for us as individuals as well. Because all of us, most of us is probably sitting with bonds where we need to pay monthly interest on, inflation. We know the impact inflation had at our spending capacity at the end of each month. So it is not only focusing on the fund itself, but on the current economic climate, both globally, in Namibia, and then of course our reliance to South Africa from an economic perspective. Also how these recent events that unfolded over the last couple of weeks with the elections, what impact that had on the market and what has been the market's reaction. Now, ladies and gentlemen, the fund's total assets, you would have seen from the report, currently in excess of $600 million Namibian dollars. And a certain portion of those assets are invested in Namibia, a certain portion in South Africa, and then a certain portion offshore. And this is really to maximize the returns, but also to diversify risk, that not all of our eggs is in one basket. There's some eggs in the Namibian basket, there's some eggs in the South African basket, and then there's some eggs in the international market. And the fund have appointed investment managers that is constantly looking after these three buckets of assets and continuously looking at developments and how can they optimize the returns for you as members. I see there's some issues with the color. I think the red is probably starting to go. Usually it was a red Monday or something, but Blue Monday, sorry. But ladies and gentlemen, the thing that we've been facing globally since COVID has been inflation. And although today, 4 years on, there's no more social distancing, we can have our AGMs face to face, we can go and buy our beers for the weekend, we can travel without testing, etc. But the events during COVID, from an economic perspective, the measures that was implemented by governments, we are still facing today the backlash or the results of that. And the first one was inflation. And initially inflation was triggered because when we went into lockdown in 2020, March, April 2020, global lockdown, your developed economies, your United States, Europe, UK, China, all over, they had the luxury, they had sufficient reserves that they could make money available. They printed money that was given, and then in the US, for instance, and this is an example of a physical check that you got as a US citizen during COVID of $1,500 US. So that's $30,000 million, more or less, that you got through the post. And then you could have used that money for whatever you wanted to. If you wanted to go and invest it, you could have done so. If you wanted to go and pay off some debt, you could have done so. If you went to the Walmart and want to buy a new big screen TV, you could have done so. So it was money, it was stimulus packages that was made available to keep the economy going, because the economy cannot just grind to a halt, because it was an event that we've never seen before. And that was the initial reaction. Is it just me, or can you still hear me? Okay, so that was the initial way. So there was a huge influx of money, if one can call it, printing of money, and that initially resulted in inflation kicking up. And then secondly, when the economy started opening up again 12 months, 18 months afterwards, now if all of us in the hall and online, if say for instance we had a factory, but now for 18 months we were closed down, locked down. Now the government says, yes, we can start opening up again. But you do not just open up and immediately start selling your goods again and start trading again. We first now had to start manufacturing again. But we had to now procure our resources from somewhere else, which was also locked down for 18 months. So we had to wait for those resources, for those goods to be shipped, so that we can package, manufacture, that we can sell off. So you had a huge supply-demand challenge. There was a massive demand, but not enough supply. And during this period, we saw, for instance, this huge container ships lying at anchor for weeks because they couldn't offload, because everybody now all of a sudden was rushing to get back, needing these products, etc. And that had a further negative impact on inflation. And it's here where your central bankers probably were caught a little bit off guard. Central bankers, this is now our Bank of Namibia, South African Reserve Bank, in the US it's called the Fed, so your central bankers thought that inflation was transitory, so short term, that this will blow over and that we will get back to a normal environment again. But then to complete basically the perfect storm, and I promise you this is blue, and the other one is red and yellow, so it doesn't make sense, but this is to show you the invasion of Ukraine by Russia, and that had a further negative impact. Why? Because 30% of the world's wheat production came from Ukraine. 30% of the world's fertilizer production came from Russia. So because of the war and the sanctions, there was not sufficient supply of those goods. And especially those wheat was predominantly exported to developing countries, to Africa. And ladies and gentlemen, that is why we've seen food inflation. I mean, look at things like cooking oil, maize meal, all of that have just increased tremendously and went to record levels. And that was as a result of now all of a sudden there was not that supply out of Ukraine, and there was not sufficient supply of fertilizer that the farmers would again need. The price of fertilizer goes up, your input cost is more, inflation, inflation, inflation. So the result then is that inflation went to record levels. And now you can make no sense of this, but it was not only a phenomenon that was to developing countries or African countries, it was a global phenomenon that inflation blew out, just way without, beyond its required ranges. And how did your central banks react? They started increasing interest rates, and aggressively. So we saw that huge interest rate cuts just after COVID, and then there was a lull, and then we saw interest rates going up quite aggressively, continuously, and we are now at pre-COVID levels in terms of our interest rate cycle. And this was the measures that was implemented globally by central banks to try and rein in inflation. And ladies and gentlemen, unfortunately, the bad news is don't expect interest rate cuts this year. Although the US Fed, and I promise you the 6 people are the US Fed, they are the drivers, or they determine global interest rate policy, because America is still the biggest economy in the world. So everybody is now anxiously waiting for the US Federal Reserve, whether they and when are they going to start reducing interest rates. Now the noises that is coming out that at least they're now looking at starting to reduce interest rates, but some market pundits say let's not before the elections in the US or by September. So the moment that the US Fed starts reducing interest rates, that will trigger or will at least show, or can then the rest of the world central banks can then start considering reducing interest rates. But here we in Namibia, because of our much better fiscal position and sentiment in Namibia as opposed to South Africa, for instance, currently the Bank of Namibia's repo rate is 50 basis points of 0.5% below that of South Africa. Now, it might very well happen when South Africa starts reducing interest rates, but keep in mind that will not only be after the US Fed starts, that we might pause with that first cuts to bring that gap, to narrow that gap. Because if that gap is too wide, you can potentially see an outflow of money from the Namibian to the South African economy. Because if I get exactly the same interest, but I get 0.5% more in South Africa, why would I invest here? So just to make sure that we don't start seeing leakage to South Africa, our Bank of Namibia, Governor Gabagap might just say, no, hang on, we first need to narrow that gap before we can start considering interest rates. So, ladies and gentlemen, don't, if you now do your budget for the next 6 months towards the end of the year, just work on the same interest rates that we're currently paying. And then hopefully, if all things stays equal and there's no further surprises, then hopefully by first quarter, second quarter next year, we can start seeing some interest rate cuts. But please don't go and spend your Christmas money now. Rather keep that for a rainy day. Then the interesting stuff, the South African elections. And why am I focusing on the South African elections? We all know that our Namibian dollar is linked to the South African rand. Our interest rate policy is very much influenced, determined basically by the South African Reserve Bank. 80% of the goods that we consume in Namibia is being imported from South Africa. South Africa is the biggest economy in Africa, so obviously what is happening there will have an impact not only on the continent, but very specifically on us in Namibia as well. So we saw the elections, the wedding took place, the vows were exchanged, the rings were exchanged. The band played, the party took place, but ladies and gentlemen, now this couple need to move into their new house. And each of them is coming with a lot of baggage. In-laws, each of them is coming with a lot of children. And ladies and gentlemen, this was a forced marriage. This was not that the two fell in love. They now need to make things work. And there's huge challenges because those children are hungry, they want education, they want service delivery, they want peace, stability, crime is an issue, they want land, they want housing, and each of them now need to work together to make this work. And it's really an opportunity for South Africa since 1994, like they've put the reset button. And another opportunity to really build South Africa to what President Mandela had hoped for in South Africa. But it's going to be challenging, definitely. It's going to be challenging over the next five years. But from the market side, the investment market have reacted very, very positively to the outcome of these elections. And if we, for instance, just look at the currency, US dollar to the Namibian dollar, yesterday, I haven't looked at this morning yet, but yesterday it traded below 18 Namibian dollars to the US dollar for the first time in a very long time. This is just the last 3 days. You can see that initial strengthening of the currency before the elections, that was more dollar weakening as opposed to Namibian dollar strengthening, but this last strengthening was purely sentiment towards the South African economy, or the trajectory or the promises that maybe they can go on the right path, has definitely improved. And then the All Share Index as well, Johannesburg Stock Exchange. First time in history closing over 80,000 points. So a lot of positive sentiment from the market's perspective towards the South African economy at the moment. And ladies and gentlemen, if you look at over the last couple of years, there has been a massive outflow. These two graphs on the middle and the right just shows you foreign direct investment. And there has been an outflow of foreign investments from both our equities as well as from our bond market, our South African bond market. So it's investors that lost faith, they took their money out of the market, and now they're sitting on the sidelines, and hopefully we can see this money coming back now. Because if you look at the South African Stock Exchange, it's very cheap. This is just the PEs, very cheap. And then also over the last 14 years, there has really not been any returns in US dollar terms from the JSE. There was pockets, your Naspers, BHPB, British American, yes, they did well. But the rest of the market struggled because the last 14 years in the South African economy was challenging. You had state capture, you had the lost Zuma years, you had load shedding, you had all of those things. So the companies that were able to survive barely did so. And this is where the potential growth is sitting. And this is what is making your asset managers exciting, that this is the potential for future growth. Namibia, we are looking much, much, much better. Unfortunately, this economic and umbilical cord is still there, or unfortunately, it's there. It has benefited us tremendously, so let's not discard it now because it's going better here. But in Namibia, our growth expectations is much higher. We've seen this morning again, in excess of 4% predicted for the next couple of years. So a lot of positive developments. And ladies and gentlemen, that is not only in terms of oil story, there's green hydrogen, there's mining, all of those. So a lot of positive sentiments towards Namibia at the moment. And that is why we can currently have this 50 basis points difference between us and the South African repo rate. And just the chairman and everybody will know, I'm passionate about this oil thing, and I do not let any opportunity pass without explaining or showing you, just to try and put in context the possible implications, the impact oil could have on Namibia. And if you start traveling now down to Ranjemund and Lüderitz, you actually see this physically, the boots on the ground, the shells, even what is the other company, Gulp, all of them. You see they're building hangars, they're taking up property long term. Where there was initially no flights to Lüderitz, there's 2 flights a day now to Lüderitz. Daily flights to Ranjemund. So it is happening, ladies and gentlemen, it's happening. Let's not pop the champagne yet. It's always difficult to get a champagne cork back, but I think the positives are there. And just to show you, this is the current deficit. So we need, as a country, we need to borrow 9 billion Namibian dollars every year to pay all of our bills and to make sure we can renovate, etc. Our SACU revenues is 24 billion Namibian dollars per year. And that's also not it differs from year to year. And then, ladies and gentlemen, if one of these big oil containers holds about 200 kilo barrels of oil, that is the capacity. Now, if only 2 of those containers or tankers can be produced per day amongst all of these wells, the contribution from that, purely just from taxes and levies, not physically owning anything from the physical oil coming out of the ground, the income from that alone will be 31 billion Namibian dollars. And ladies and gentlemen, those expectations, it is conservative expectations. The more drilling that's being done, the more positive the results. So this can be a game changer for Namibia, for the young people, for our next grandkids, their kids, etc. Yes, there's still a way to go, but let's remain positive and optimistic. But it's not only we're not putting all of our bets on oil. As I said, you see all of these other things, mining, uranium, green hydrogen, all of that, putting Namibia's prospect in a much, much better position compared to the rest of the continent. Our elections also coming up, 27th of November, and we are part of this year it's unique. 64 countries this year either went to the polls already or are going to the polls. First time in again, human memory that so many people. India's elections already took place, Russia, for what that's worth. We saw the South African elections, our elections coming up, but then from a global perspective, and again for us as members of funds and citizens with pension funds and savings and bonds, also a very, very important election, the one in the US.
Because you forgot a very important one. NMC also had elections this year.
There you go. How could I forget? It's an election year. And ladies and gentlemen, somebody said the other day, if this is what leadership looks like, of the biggest world power, biggest economy, and let's see. But this is going to be crucial in terms of, again, influencing and impacting on the global economy. And then obviously, I mean, South Africa is 2% of the world economy. We are 2% of South Africa's economy. So you can just again imagine what impact that will have on us as well. And then there's still some geopolitical risk. All of a sudden, Russia and North Korea is now the beds of buds, exchanging cars, I see. The turmoil in the Middle East, potential escalation there, Hezbollah also becoming involved. And ladies and gentlemen, that is an oil-rich portion of the world. If that should blow out, will have a negative impact on oil prices, put pressure on inflation, and then again delay interest rate cuts. China, Taiwan, US tensions still there. So there's still a lot of global uncertainty currently, and volatility in the market, in the world. And if there's one thing that the market do not like, is surprises. And one thing we know is that the market will always overreact, either on the upside or on the bottom side, to these type of positive or negative events. But what we can assure you is that, as I've said, your asset managers that have been appointed employ hundreds and hundreds of investment professionals that on a daily basis is looking at all of these events, sitting in front of TV screens, Bloombergs, etc., monitoring what's happening in the market, monitoring what's happening globally, and then looking at where they should make decisions in terms of the fund's assets. And testament to that is, if we look at the fund's performance, total assets, as I said, this is as of the 31st of March, 611 million. But if we look at the performance, last year we had a very, very good year of just over 11% return. And that contributed substantially to the fund's solvency and protecting some of the financial longevity of the fund as well. So regardless of all of these external events and challenges and things that nobody could foresee, etc., the fund was still able to do exceptionally well considering all of this. And this is testament to a proven investment strategy that's continuously being reviewed by the trustees, by the fund, by the investment committee, to make sure that we first protect the asset, but also unlock potential returns for the longer term. And then also just stressing on what Mweni have said, this first quarter of this year, our returns just close to 1.55%, still not stellar, But we know the third quarter has been very good. Our second quarter of this year has been very good. And that what is also positive, ladies and gentlemen, is that the fund's cash flow position has improved. That actually during the first quarter of this year, we could make investments to the asset managers and not continuously disinvesting to meet our claims obligations. So early days, let's hope this continue. But again, just to leave you with the assurance that the fund's assets is closely guarded, protected, and continuously being monitored. Thank you very much.
Thank you, Kobes. Yeah, so I always say that with Kobes presentations, if you are not following, you'll probably be thinking, how does this impact the fund? How does it impact me having to be attended to medical? And as he have just finalized his presentation is for the fund to be able to operate sustainably, we need to have the investments and we need to have the reserves. And those assets are the ones that Kobes was then just highlighting. What will the investment returns on our investments? So as you've heard, last year was a good year. We had years that we were actually taking from the reserves to meet our claims. And as Kobes have mentioned that we are now having a possibility, or we have been having a situation where we're actually reinvesting more. So thank you, Kobes, and thank you for a well put together presentation. It just shows that we live in this global village, and anything that is happening will actually have an impact on us. So then I will then give this approval of the annual financial statements. I'm not going to present this. The chair has the liberty to then call upon and delegate, since it's my last day also. Colleen is going to do that for us. So please allow me to welcome Colleen to give us an overview of our financial statements for the period ended 2023, and then for our consideration for approval. Thank you.
Good morning, everybody. I think everybody have given quite an extensive overview of the performance of the fund, and this will basically just be a summary of everything that you've heard up till now for the day. So just to give a summary of what I will be speaking about. So firstly, the introduction, and then just the IFRS 17 impact, our audit opinion, and then just a short overview of the summary of a statement of financial position and the statement of comprehensive income. Just to give a short summary of everything that you will be hearing. So for the 2023 financial year, we had a total of 1.88 billion in premium income, but we also had insurance expenses of 1.93 billion. And as you can see, that can give you a negative, but as Kobes indicated, we had a very good financial investment year, and that made up, and we managed to get a surplus for the year of 56 million for the 2023 year. As you can see, last year of the 2022 financial year was not as green and as positive, and therefore we were struggling with the reserve level as we are seeing. So in terms of the financial reporting standards, we had to adopt IFRS 17. It is a new standard on insurance. It's very technical and it's very complex, and it had to be applied retrospectively. But NMFISA also said for the next 2 years, to accommodate all the funds and the NMFISA system, we will take a 2-year period to accommodate the changes and the reporting, and to make sure that all the funds are then reporting on the same manner. So the main thing of IFRS 17 is to say NMC is now a mutual entity. What does that mean? That means it's our fund. We as members, that funds that we are putting in, that is what's coming back to us. And you won't, where we always showed reserves, we are now showing a liability to members, because that's what it is. When we put money in there, that money is all back due to us, that we can use that for claims at some stage, and that the fund can be managed appropriately. So just to give a summary, so the other thing also, sorry, which I forgot to indicate, is that this standard also indicated that at the beginning of every, or at the end of every financial year, you need to assess whether your fund will be in a profitable or in a loss position for the next year. For 2022, we anticipated 23 to be at a loss position because of the high claim variance. Then in 2023, end of that, as Mweni also indicated, we've accounted for the fact that we need to build up reserves, we need to account for the inflation, everything, and therefore we did not expect a loss for 2024, and that is the effect of that. So usually you would have looked on your financial statements to your liability to members line on your financial statements, and that is what is due to us as members. That is our reserves in the old regime, the old way of reporting, if I can call it that way. So in 2022, we ended with a liability to members, or the old reserves, of 390 million after all the adjustments was done. For this year, we are ending at a 445 million. As you can see, it increased, so it was a better year for us. This claims everything that's still outstanding, everything that the fund still needs to pay at year end to adhere to all the contracts and claims that was submitted. That was in 2022, it was 210 million, and that decreased actually from 210 to 178, because the claims experience was slowly coming down from the previous year. And therefore, you will have to see that we have a surplus of 54 million for 2023, where we had a deficit of 115 million in the previous year. And that, if you look at the detail of the financial statements, you will see that in note 14 and 16. So I'm jumping in. Danica can quickly come and just explain the audit opinion.
Okay, thank you. So we have ordered the annual financial statements for 31 December 2023. We are required to audit it in terms of International Financial Reporting Standards Act and in also the Medical Aid Fund Act. And we have concluded our audit work, and we will be issuing an unqualified audit opinion to say it is fairly presented, so it is not materially misstated, and we are satisfied that the fund's financial statements are complying with International Financial Reporting Standards. So we've also spent quite a lot of time specifically looking at IFRS 17 and the updated numbers and disclosures, and we are also satisfied that that is fairly and reasonably stated for this year. Okay, thank you.
Thank you, Danica. Thank you, Danica. Okay, so just to give a short summary of the statement of comprehensive income. So if we look at the fund where we had insurance revenue for this year of 1.8, sorry, it's 1.84 million, and the expenses, as I said, were at the 1.93. As we also already said, we had a very good year in financial investments, and we are, and most of our, well, not most of, but we really made up for the high claims experience with the investment income that we received. If we look at the statement of financial position, you will see that over the last 3 years, if I specifically move over to the investments, you will see that we've moved down from 600 and almost 30 million investments to 558 million investments, which really shows how much we have taken from our reserves in the past few years and how deep we dove into our pockets to cover all the claims and get all the expenses covered. And moving over then to your your current liabilities, as I explained already, our insurance liabilities is down 178 million, and the reserves or the liability to our members, that is at 445 million. So just to summarize, we have a reserve level at the end of the year of 23.7, where it was at 23.5 for the previous year, and the solvency ratio, which is the total assets over the net claims, of 32% versus the prior year, 36%. The fund is managed to create and generate a surplus for us. It is there to look after us, and we managed to generate a surplus after a few very tough years. The fund is recovering quite well, as we've seen from Mweni and from Kobus as well, and the trustees are really implementing and monitoring very strict and numerous cost control measures to manage the fund to the best of their abilities. And the trustees are very positive that the fund will recover soon. Thank you very much.
Thank you, Colleen and Danica, for the presentation. Much appreciated. Now that the auditors have confirmed that the financial statements were done in accordance with the standards and that they do not have any issues with the financial statements, can I then move that we approve the financial statements for the year 2023? Any? Thank you. Approval, can I get an approval? Thank you very much. We will then we take that our financial statements are approved. Okay. Ben, you also get a chance to say something. So please come up to then present the remuneration proposal that we have for the Board of Trustees, so that the members can then see what you have as the remuneration for the new trustees.
Thank you, Mr. Chair. Good afternoon, everyone. My duty, I think Mr. Chair just wanted to give me a going away present, since it's his last term. But on page 28 of your board of the AGM pack, we have the remuneration, trustee remuneration for approval, as we always do at the AGM. And then in line with what we've been echoing, what the fund has been echoing, the initiatives to reduce costs, the trustees recommended that there be no increase to the fees of the board the board members. So there will be no increase for this time around. Yeah, so it's actually a 2-year running that we haven't, the trustees decided that because of the industry challenges that we're currently experiencing, they were happy to not have an increase on their board fees. And just for reference, so you're looking at page 28, you can look at the minutes on page 8 just to see that we are not just, we are serious. Okay, thank you.
Thank you, Ben. That is the news for the new trustees as well. Then we can move into the other matters. This Joanne will take, and that's why we said that we do appreciate those that have contributed and submitted their questions and inputs on time, so that we prepare thoroughly for those questions. And it is for that reason that Joanne is here to just give an update on the issues that were raised and that were submitted to the office.
I like presentations. Okay, so some of these questions I received a little bit late, but I decided I'm going to address it anyway because most of the members have similar questions, and I thought it would be helpful if we can then just address those, and maybe it's a question you had as well. So first of all, don't know why I did that, but anyway, we had, well, there's been a lot of newspaper articles on the medical aid fund industry, on the administrators. My personal opinion is that most of those articles are not balanced. They are only taking one point of view into account. So I do want to address that issue here this morning because it's been a question for most of our members. So this question specifically was relating to the payments that's made to members, and I do believe that in one of those articles it said that we're paying dividends to MedHealth. Okay. So first I just want to explain. NMC is the fund that belongs to all the members. The members appoint a board of trustees to manage the fund on their behalf. Okay. Then the board of trustees of all the medical aid funds in Namibia appoint an administrator to do the operational work. Okay. This work includes your member onboarding, your claims processing, your client services, your managed healthcare services. You'll see that it's a very long list. So the core expenses of, or the core operations of a medical aid fund in Namibia is given to an administrator. So if you think about it, apart from the healthcare costs, the claims that we pay, this will be the biggest contract that the fund would have. So obviously you would pay a substantial amount because we have 33,800 members, give or take. It's a big task to do all of these duties. So a big chunk of our non-healthcare costs will, of course, go to the administrator. The question was specifically related to the payment of dividends. So a medical aid fund is a not-for-profit entity. Okay, what this means is that we will not pay dividends to any person, and especially not to MedHealth or to any other entity. As Mawineni has explained, if there's any surpluses, it goes towards the reserves. And as Carlene has explained, those reserves are earmarked for members, for the funds that we might need in the future, so that we're able to pay claims when we have catastrophic kind of events like COVID-19, for example. And that's why NAMFISA also says they give us that prudential guideline so that we put 25% of our surpluses into the reserve level so that we have that available when there are very big events that take place or you have a lot of emergencies, so that you can actually make sure that your members are catered for based on the option that they chose and the available benefits that they have. So I hope that clarifies it very clearly. I do also just want to say MedHealth in its own capacity is a private company. So they are in business to make a profit, which means that they do have shareholders, and if they do make a profit, how they distribute that to their shareholders is up to them because they are a private company and that's how they operate. But we as NMC would never pay dividends or anything else to Medhealth and the administrators other than the services that they are delivering to us and to our members. Okay, right. Okay, then, just also for clarity and just to put it in context, because I know if you look at the Namibian dollar value of what is paid to our administrator, and we don't hide any of that information, you can very clearly see it in our annual financial statements, which we share with all our members every year. You can go onto our website at any time and you'll see our annual financial statements are listed there. It's been listed there for the past, I think the annual financial statements for the past 5 years are on our website, and we share that information with our members. But just for context, so we have healthcare costs. Your healthcare costs is what we pay for claims that we get from doctors, health facilities. So most of our costs, in fact, should go to the healthcare providers and the health fraternity for the services that they deliver to our members. Okay, that is healthcare costs. So claims in, payment out. Then we have non-healthcare costs, like any business has non-healthcare costs, which is probably your administration costs. We pay for marketing and promotions, our actuarial investment consultants, our IT services, the audit we need to do, as well as our NMC office salaries, because we work for the fund, and there's only 4 of us that work for the fund, and also for our office expenses to run the business at the end of the day. So let's just look at our experience over the past couple of years. If you look at healthcare expenditure and non-healthcare expenditure. In 2022, claims versus contributions, so contributions coming in, how much of that did we use to pay claims? 98.6% of the contributions that we got in, we used to pay claims, okay? Then for our non-healthcare expenditure, so that's everything that's listed in that block above. Our total non-healthcare expenditure is 9%. If you think of your own businesses where you work, what do you pay towards administration fees in a year? Is it 9%? I think 9% is quite low for us that are in the services industry. And of that 9%, 7.5% was paid to the administrator. The administrator that is the biggest service provider to the fund that provides the most services to our members. Okay. Then in 2023, okay, we didn't have a very good claims year, and you can see we actually paid out more claims. And again, that's what everybody was talking about today, where we had to take some of the reserves to be able to cover all our claims. And that's why our reserve level has now dropped, and that's what we're trying to catch up and to make sure that NMFISA keeps us on our toes, and to make sure that we have sustainability of the fund, of course. So in 2023, our total non-healthcare costs came down to 8.4%. Of that 8.4%, we paid 6.9% to the administrator. As you can see, Medhealth has also come to the table. The minute when the industry started having problems, we started speaking, and Medhealth started speaking to us to say, how can they assist us? They have reduced some of our administration costs, and in fact, they also didn't give an increase. We didn't negotiate an increase with Medhealth for 2024 either. So you see in the past 3 years and year to date for 2024, we've been working very hard on reducing our non-healthcare costs as far as we possibly can, because we understand that a medical aid fund is there for the members, and the fund belongs to the members. And we want to pay out the claims of the members. We want the money that comes into the fund to go to healthcare, because that's exactly what a fund is for. So the trustees, the management of NMC is working very hard to keep those costs, non-healthcare costs, as low as we possibly can. But we need to have administration. We need to be able to onboard a client. We need to be able to process a claim. We need to be able to pay out that claim. So those services are very necessary. So I'm hoping that that will clarify everything that's going on in the market at the moment. One of the other questions that we've received regularly is about the additional hospital benefit. And again, I just want to put this in context, where the additional hospital benefit comes from. Some people talk about gap cover. So in other words, when you go to the hospital, the difference between what the medical aid fund covers and what the doctor or the hospital charges you, that is what becomes the co-payment of the member. The gap cover is there to help lighten that plight of the member, so the co-payment is less. So let's have a look and see what happened in the private medical aid fund industry many years ago. Namibia had very few GPs and specialists in Namibia. So the private medical aid fund industry actually got together and they said, how can we attract more doctors and more specialists to Namibia? Because people had to travel to South Africa if they wanted to see a specialist. And there were very few GPs in Namibia as well. So what they did is they said, let's do like a gap cover, an additional hospital benefit for our members, but where we actually incentivize GPs and specialists so that we can try and attract them to Namibia. So what they did is they said, okay, let's pay the health professional what's due to him according to NMC tariffs. And what NMCs do every year is they look at the expenses of a doctor, his practice expenses, paying him for his qualifications, paying him for the equipment that he has. And then they say, this is a fair price. All the medical aid funds agree and say, we agree this is a fair price to pay this doctor for a consultation, taking everything, all his expenses into account. With the AHB, we said for in-hospital procedures, when a doctor does an operation, we're going to pay him what's due to him, what we think is a fair price, 100% of NMC tariff. But to attract more doctors to Namibia, let's incentivize them. So all the private medical aid funds in Namibia paid 225% of AHB to our members. So 100% NMC tariff plus 125% as an incentive to get more practitioners and doctors in Namibia. Okay, forward 20 years. So now we have a lot of GPs and specialists in Namibia. We've actually reached what we wanted to do by doing the AHB. And as it happened, COVID happened, all the funds were in dire straits. Sustainability of all the medical aid funds in Namibia was under threat. So as an industry, we had to come together again and say, okay, how are we going to help the medical aid fund industry in Namibia? How are we going to ensure that we have future sustainability? And one of the things that we looked at was the reduction of the additional hospital benefit. Because remember, this is actually a correction. Okay, because the doctor is already receiving 100% of a fair price for the consultation, the procedure, whatever it is that he's doing. So one of the places that we looked at to see at how we can actually improve the experience is by reducing the AHB. So in 2023, we reduced, the entire industry reduced the AHB to 100%, what the doctor, what's a fair price, plus 100%. Okay, so they were still getting a very good, they were still very well compensated. And then in 2023, when we realized that the claims experience hasn't really changed, funds were still bleeding, they were still, making deficits, we adjusted that a little bit more and we said, okay, let's change it from 200% to 150%. This means that even this year, a doctor is still getting 100% of what's due to him when he does procedures in hospital, plus 50%. Okay, so I just want to explain that to you, that we had to take certain measures just to help the funds ensure their sustainability. Otherwise, we would have to close our doors. So that's what we did, and now we're getting a lot of questions from our members, which I also understand, because now they go to the hospital and they now have a higher co-payment. What we have realized this year is that about 35% of the GPs and specialists still ask within the new regime, the AHB plus 50%, while 65% of the health professionals do not ask that. They ask various levels of the NMC tariff plus the old one of 100%, 125%. Namibia is a free market, so the doctors can decide to charge exactly what it is that they want to charge. There's nothing that regulates the prices of consultations or procedures for doctors. So I just want you to take that into context as well. We are looking at this very closely. We are monitoring it. It's being reported to the trustee meetings. And the trustees are going to look at how we can lighten this plight of the members. But I do also just want to remind you that you can always negotiate with your doctor. You can always tell him or ask him what is his rates that he charges, so that you as the member is also empowered and aware of what your co-payment is going to be. Our idea is not to discourage our members from having procedures done or getting the medical necessity that they need. But we had to look at our fund and say, what are the things that we can do right now to make sure that this fund continues to care for the members that they have? So I hope that makes sense. I think that was, oh yeah. And then there was a suggestion from a member regarding email communication. She just says they receive a lot of emails from NMC from different sources. So I understand her frustration completely, and we'll definitely take this forward and see how we can better improve just the way that the emails appear so that you know this email is from NMC. Then the last question I received, okay, so we always receive this question on the GPs and specialists day-to-day benefit. There are certain benefits of a medical aid fund that will always be utilized and almost always utilized to full capacity. The GPs and specialists is one of those benefits. If we increase the GP and specialist benefit by 1,000 Namibian dollars, for example, all members, just about, is going to use that entire benefit. Imagine the financial impact if all 33,000 members and their dependents use that benefit to full capacity. 1,000 times 33,000. Now imagine the impact that has on the premium at the end of the day. Because premiums are determined based on claims experience, on benefits. Mawineni explained it very well. But the impact on the member's pocket for next year when we increase that benefit is huge. So yes, we want to give our members all the benefits we want, that they want or that they need, but we also have to look at the bigger picture to say, yes, we can increase this, but then please accept that your premium for next year, the contribution you're going to pay, is going to be more expensive. One of the things that members because I realize there's a lot of members that actually only use their GP and specialist benefit, one of the things they can consider is doing a hospital plan with our backup benefit. Because on your day-to-day, you are then in control of how you spend your day-to-day benefit. You choose where you spend that benefit. So if you use it on GPs and specialists and you don't use any of your other day-to-day benefits, that would be up to you. It puts you as a member in control of that benefit. And I'm talking about the Emerald Plus and the Amber Plus. So have a look at that. If you are somebody that would like more control over your day-to-day benefits, while you still enjoy cover for hospitalization, this would definitely be an option for you to look at. If you only want to spend it on optometry that year, the entire amount, that'll be up to you. And if you have any benefits left, 95% of those benefits are then carried over to the next year. So it's a possible solution. We are continually looking at the benefits and how we can best balance the improvement of benefits without having a severe impact on the pocket of the member. Okay, I think that's all the questions I received. So we will have a question and answer session once we've closed the meeting. If you have any further questions, please also stay. We have coffee, we have tea, we also arrange some snacks. Please stay and chat to us, chat to each other. We have some of our MedHealth our MedHealth colleagues here as well to answer questions. I also want to ask you, while I have the podium, you're never going to get me to stop talking, but I also want to ask you as members, and I really want to bring the message home that this fund belongs to you. It does not belong to the trustees. It does not belong to MedHealth or the principal officer. It belongs to you. And I want you to please also consider that we need new members, we need young members to keep this fund going and to keep it sustainable. And I want to appeal to you to speak to Jan Hesselman, who's the marketing manager of MedHealth and does the sales and for NMC, that if you're aware of a group or people that are in need of healthcare, please speak to him and bring members to our fund. I'm maybe going to talk out of the house now a little bit, Pinyas, but luckily he's outgoing, so that's okay. But as part of our strategy last year for NMC, we said the main thing we want to achieve is to be the last man standing from a medical aid fund perspective in Namibia. So we are doing everything that we can to ensure that NMC is the last man standing and that it's looking after its members at the end of the day. And again, while I have the platform, Pinyas, I just want to say to you, even though I've only been the principal officer since November last year, I've been working with the Board of Trustees and with NMC for many, many years. Pinyas, you've been diligent, you've been amazing. He's so patient, okay, he never loses his cool. He's a great leader. And also to Barbara Iyalu, who's sitting in the wrong place, she should be sitting at the table, she's also a trustee. And to all the other trustees in their absence today, I'm really sorry they couldn't make it, but thank you so much. I hope our members realize that these trustees take time out of their personal time at night to read board packs, to attend meetings. There's an audit committee, there's an investment committee, there's a nomination and remuneration committee, and the trustee meeting. And in fact, I tell you, we had a trustee meeting this week, and that board pack was how many pages? 308 pages. Imagine preparing for a meeting that you have to sit in for 4 hours. And you still have to prepare, and you can't do it in your work time. You have to sit at night and go through that board pack and understand what it's about. These people do it for love and charity. The members just approved the remuneration that they receive. It's very little for the effort and I think sometimes the emotional turmoil and the responsibility that these people carry for a $1.9 million business. So thank you so much to all of you. I'm really going to miss you, and I'm definitely going to miss Pinyas. I wanted to ask Namfisa to change the rules so Pinyas could stay for another term. But you guys have been great. Thank you so much. And it's only our strongest leaders that can bring us through these turbulent times. We thank you very much. Okay, and to the new trustees, I just want to say, good luck.
Thank you, Joanne, and on behalf of myself, of course, and then the fellow trustees, we appreciate this. We have 2 more items, the closing and then the announcement of the election results. We've been emphasizing that this is your meeting, this is your fund, this is our fund. I'm also a member. So this is our fund. We've been doing a lot of talking as well, so I think it is just fair that we give an opportunity to the members in attendance. And of course, we are also having members online. Just to, if you have a question, we are not going to take a lot of questions due to time. We can perhaps allow, if there's any question, we can try to limit our questions. If we can attend to them now, we will attempt. If not, we will take note, and then we will then have it attended to. Can I then just maybe request from the floor if there's any question? And maybe also online if there's any question, and by a show of hand, so that we can then just give you an opportunity. Do we have a roving mic? All right, thank you very much. Going once. With this opportunity, I'm not very patient. Okay. We have one hand there. Can I have an indication? Another one here. We want to take at least one round.
The mic is on.
Okay, so we have two members that want to ask questions. Can we start from there?
Two of my colleagues are traveling to South Africa a lot of times. Johan was in December in South Africa for Christmas visits, and he had an accident.
Is your mic, are we fine with the sound for the colleagues online? All right, you can proceed, ma'am.
he burned with a gas barbecue kind of thing. And the doctors and pharmacists, they said he can pay, and then he comes back to Namibia, he can claim the funds back. And we'd followed the process, but they couldn't give the funds back because he didn't inform the medical aid here in Windhoek that he's traveling to South Africa. And only afterwards we realized that, after Dorothy explained the process very well, but there were certain treatments that he could get the refunds on, but it was very small. So it's not even worth making the claim. But in future, we would like them to broadcast this kind of thing in a better way, because we didn't know about it. And the other one for is the owner of the company. His daughters are staying in South Africa, but it's a huge struggle to get medical attention there, because they're still students and they need a lot of medical attention. So we need a better, a broader prospect on how to handle this matter. Thank you.
Thank you, ma'am. Yes, if you...
There's only one question.
Okay, thank you. Thank you for that. I think if you noted that maybe the sound, you are not getting it through that mic, it is intended for the colleagues online. But we did hear you. And those that are going to post the questions, just please raise your voice a bit so that the colleagues in here can all hear you. But we are audible online, very clear, loud and clear. We have a question here.
Thank you. Thank you, Joanne, for mentioning that we can negotiate medical bills, because for some of us, it always feels like you pay what the doctor is charging you. It never really feels like a negotiation. But you mentioned that 35% of the doctors are within the 150 reduced additional hospital benefit, but the bulk of them aren't. Is there a way for members to find out sort of the service providers that are within, so that if you are trying to really manage your co-payment, you at least are going then at where it's going to be affordable if additional co-payment is an issue for you? Thank you.
Thank you, Joanne. You have that one. Can we then address to those questions on the benefits and then the refunds? I think the refunds was just a comment in terms of how we communicate.
It's not an actual comment, but we need more information in that regard, because traveling to South Africa for the first time and you don't know what's happening, it's a bit awkward.
Yeah. No, thank you very much. I think on that one is that one of our strategic initiatives is members education. When we're speaking of members education, we are not only mentioning the issue of what is the responsibility of the fund, but it also includes the responsibilities of members. Specifically, if then what is going to happen is that we just also then need to ensure that our funds, because there's a lot of services that are being offered, of course, but we also then just encourage the members to then see what is available to them. The rules are there, the fund rules are there also to guide us. But we have taken note of the fact that in terms of travel claims, it's something that people maybe do not understand. But I think you can be assured that the fund will have to put up perhaps a special program just to educate the members on travel-related matters. So the advertising team is also here. This is also, they are also taking note, but it is something that we, as a fund, will have to take care of. Yeah, Joanne, you want want to attend to those ones, and then Anna can also come.
Okay. On the first question, I just want to say we would need the details, but there's a lot of doctors and facilities in South Africa that actually claim directly from NMC. It sounds to me like she went the international travel route to South Africa, but we do also cover claims. Because the currency is the same between Namibia and South Africa, we usually cover them directly, or we will reimburse the member. So I now have your contact details. So I'm going to contact you so we can just get the details of that case and see exactly what happened there. Okay. What's important about the international medical travel insurance is that you take it out before you go, and that before you have any services done, before you go to the hospital, whatever, there's an international number that you need to phone, and they will advise you where to go because they handle the claim. That is it's kind of a reinsurance. We took out that insurance for our members when they travel internationally, so that they are covered. But it's very important that you don't go to the doctor yourself. You contact that number, and they will then advise you what to do next.
And in that case where your aunt had a burn and it's kind of an emergency, what happens then?
So you will then probably go to the nearest hospital, but you'll still have to phone them as soon as you possibly can. It's very important. Otherwise, they don't cover the claim. Even if Holland, for example, doesn't cover the claim, we would still try and cover the claim, but then it would be in Namibian dollars. So if you are in Europe and you're paying in pounds or whatever it is in euro, then what you will get out from us will be very small because of the exchange rate. So that's why it's so important with the international travel insurance to make sure you take out your certificate before you travel, and that you contact the number that's on that certificate. Okay. Then question 2, a list of doctors. So our challenge is the following. We know who those doctors are. We get a lot of, I don't want to say trouble, but we are put under a very, we can't really say this doctor charges and this doctor does not, because it brings us in trouble. Because they're saying we are favoring certain providers and certain not. So my advice to our members would be to ask your provider, especially when you have procedures done in hospital, but even your GP. And I know, just from human nature, you don't argue with your doctor. If your doctor says this is blue and you know it's pink, you're going to agree that it's blue. But I think we should just start thinking about, people are so educated today. We probably know what's wrong with us before we even went to the doctor, thanks to Dr. Google and all of that. So, we're empowered. We know what's going on. We read up. And I think the time has come where we should stop with that barrier and talk to your doctor. He's a person as well. He's going to understand if you say, doctor, I can't afford this, but I can afford this. And at the end of the day, your medical aid is sort of like a budget that you need to manage for yourself, especially when it comes to day-to-day. I'm not talking about emergencies, but your day-to-day benefits. Manage them. I had an example of a member the other day where he said the whole family had a stomach bug, and they are 5 people in their family. The doctor sent all 5 of them for pathology tests. Why? You could test one person, if they all have the same symptoms, and they can have the same medication, the same prescription. But you know how expensive pathology tests are. Of course your day-to-day benefits are going to run out. So just think about managing your own medical aid and how you use it. And let me not say that, but just think about how you manage it for yourselves. Okay.
We have another.
Anna, do you still have a question?
Oh.
Mine is rather a comment, and it's on information that is sent out. And we do know that there is communication sent out via email, via SMS. My urge is just that our members please read the communication, because a lot of information flows from what is sent out, whether it's with regards to any changes, any benefits. So the urge is just for the members to please read always. They send out via email or via SMS, because it's always valuable.
We have hand there. You want another? Okay, this is the last round for the comment online.
Thank you very much.
Can I have from the floor?
Thank you very much. Mine is rather a request. I'm from the south, and particularly I'm a wellness official, I'm an HR practitioner. So we have a problem that normally if you would encourage some of your employees to join a medical aid, they would rather refer you, sometimes they would say they don't really see the need to have a medical aid. And again, the fund, the NMC itself, there are less presentations, or rather no presentations. So the members really doesn't know their benefits, what their benefits are. So I would rather request that NMC from time to time have presentations for members, so that members would rather know what their benefits are. Because as a wellness officer, sometimes it's so difficult for me to explain to members what their benefits are, because myself really doesn't know most of the stuff, auxiliary and whatsoever, so one has to Google. So it's very much difficult. So I think that NMC has to really take it up and look into that matter. Thank you.
Okay, so in the audience today, right in front of you, madam, is Mr. Daniel Samaria. So maybe you can just tap him on his shoulder there. He is the manager of maintenance. He's going to make all your dreams come true and do presentations for your employer group. But I do just want to mention to the members as well, we've been developing, in association with MetHealth, a new NMC app that is, in my opinion, absolutely freaking fantastic. We'll probably be launching it soon. I'm hoping the 1st of July. And there it'll tell you exactly what your benefits are, what you've used, what you have available. It's really great. It makes it very easy to just see what is available for you and your family and what you've used. Okay, so just keep your eyes on our social media platforms. We'll be launching it very soon. There was a question online about what the average age is. I'm going to direct you to page 27 of the AGM agenda pack. It's also available on our website. The average age for 2023 was 42.84. Carlina, I don't know if you can recall what the current... 43.61. Thank you, Moeneni. Okay, so that's where we currently are. So we do need younger members in the fund, because the younger the fund is, the better our claims experience, and that's better for everyone. That's part of the medical aid fund.
All right, thank you. Yeah, so I think it has been said all along that why we need the younger members is that the more the younger members contribute to the sustainability of the fund, when the younger members, or when those that now get older, then the fund will be able then to take care of them. That is the idea. That's why there's an emphasis that we need the younger members to stay in the fund, to contribute, and when we get older, then we have a very much strong fund that will be able to take care of us. So, we do have some questions here. All right. Do we have more? I think then let this be the last and the final round of questions. We need to announce the results, and we also need to close off. We've started. We are going almost for 3 hours now. The one question: who's going to be reading? Must I read the questions?
Yes, perhaps in the interest of time.
Okay.
Our colleague from Deloitte, unfortunately, has to leave and he needs to present the results.
All right.
What I would suggest is if members can please just post their email addresses on the online platform, I will get back to each of them individually.
Thank you very much.
Say it again.
I think that is a good idea. We will take note of all the questions that have been posted, but we will also then do a write-up on the responses, and then also have them on our website and the social pages. Can I then ask for El Seco to then just come on the podium to briefly just take us through and then give us the results of our new Board of Trustees.
Okay, well, he's setting up. They've just asked me to talk into the mic. So if you have any more questions, please post them on our on the chat box with your email addresses, and I will respond to you individually. We'll also then just post those questions on the website so everybody can go and read them in the next week or so. Thank you.
Good afternoon. My name is Elseko Wiso. I'm from Deloitte, Namibia. I'm a manager in the Risk Advisory Department. All right, so today we're going to just have a look at the election that took place, the overview, some of the statistics, the challenges that we observed during election, and then finally the results. Okay, just the general overview of the election. This is the second time that NMC is doing this. Okay, this is the second time that NMC is conducting electronic elections. The nominees were given to us by NMC. Then we took these nominees and created a electronic ballot from a company called Election Buddy. It's independent, and we have vetted the system that it works accurately. NMC also provided us with a list of member details, such as the mobile numbers and the email addresses that were used to notify members on the election. Then on the system, unique keys were generated and sent via email so that members can vote. The SMSs were actually sent out by NMC. Then the election started on the 4th at 8 a.m. and closed on the 18th of June on the Tuesday at noon. So what we saw, or the reason why we wanted to do this electronically, we saw that there was more participation. There's also a direct emphasis where members can vote at the comfort of wherever they find themselves, whether it's at home or at the office. And also it reduces inefficiencies. So general statistics. So in 2021, the first time we did it, the number there is 3,171 members that voted. This year around, that number is 3,670, which is about a 16% increase in voter participation. Okay, in terms of the invitation sent out, once again, as mentioned, the SMSs were sent out by NMC. The emails were sent out by the independent system to the members. Those are the numbers that were sent out in total. We sent out emails about 4 times. The initial time when you started election, and then three reminders afterwards. SMSs sent out, they were 3, also in the beginning, and then they were sent out 2 reminders, and those are the numbers. In terms of individuals opting out and failed, we don't really have the statistics on the SMSs, but in terms of emails, and I think it's something that the PO mentioned, that it's important that you do give adequate and accurate information to NMC so that they can send out the notices to the correct emails. All right. Okay, so these are further statistics in regards to members who successfully voted, members that opted out. An interesting statistics here, or interesting stat here, is that there were 8,138 members that opened the ballot but didn't vote. So it would be ideal to try and investigate how we can actually get those numbers, the 3,670 and the 8,000, to match, or not even to match, to reduce, that you do actually get 100% participation. At least if you open it, you can vote. Then this number, that graph at the bottom there, it shows that this constitutes about 11.29% of the individuals that voted. Then we also noted that it took on average an individual about 7 minutes 30 seconds to vote. There were about 12 nominees. So maybe that also is the reason why the average voting duration is so high. Moving on to more stats. I hope I'm not boring you. So we tallied in total 11,350 votes, and there were 57 individuals that abstained. By abstained, it means that they actually opened the ballot but decided to not vote for anyone. The 30 individuals that opted out, those are individuals that got a notification and decided, I'm not continuing on to even look at the nominees. I stop it there. I opt out. All right, some of the challenges we observed. As mentioned, we did see that there was some information that was provided to us that either there was no email address or incorrect email address. The mobile number was also not available. In some cases, both the email and the mobile number wasn't available, so we couldn't reach to that member in terms of voting. Some members were also not aware. We did get some responses via email where members didn't know who the nominees were or didn't know why they were voting. So all of this information is actually forwarded to NMC so that they can better prepare and improve moving forward on this. And we also saw that the length and timing of the election, if we had maybe a day or two extra, the numbers would have increased also. Then we come to the email. So this was the bulk of the issues that we saw, that the invalid, for instance, the last line where it says invalid recipients, it would just mean that that email address is completely wrong. So the individual would not receive that email. All of the statistics are provided to NMC so that they can get the information of these individuals or members, so that this information can be sent out, or other further information can be sent out to members. Okay, then I come to the more exciting part, the results. So the next slide after this is the results of the individuals who are your new Board of Trustees. So they're in chronological order from 1 to 5. 1, the individual who got the most votes, and 5, the least. After this, there's still a breakdown of per member what each member got in terms of votes after this slide. So without further ado, the newly elected Board of Trustee members are these individuals. Congratulations. Okay, and as mentioned, the tally of the votes per individual are these. So these are the 12 nominees, and per nominee, how many votes each individual received. All right, thank you.
There we have it, ladies and gentlemen, and once again, congratulations to the new Board of Trustees and the elected Board of Trustees. Yes, there you have them. So please give them the support and they will deliver. So on that note, ladies and gentlemen, allow me then just to take this opportunity once again, maybe to thank you, and so that I do not, I also give an opportunity to my fellow trustee so that you hear from one of the outgoing trustees. Barbara will, Madam Sebe will do the closing remarks. And then now we must have a wonderful weekend. Barbara, thank you.
Already good afternoon. I think much has been said. And as my children used to say, Mommy, I'm hungry for meat. I could see that you are really hungry for information. Thank you so much. And already gratitude has been expressed, but once again, to all the NMC members, without you, the fund is nothing. Thank you for being here in person, but also for those who are online, thank you very much. Without the members, there will never be a Board of Trustees. As you have rightfully said and seen, they were voted by the members, and the members have spoken. And to the newly appointed Board of Trustees, welcome. I would have loved to see them here. Is there anyone of the Board of Trustees in the house? You know, it was a secret until the last minute, and maybe they were hesitant to be here. And based on that, they are not here, but I believe they are online. So wherever they are online, welcome. Welcome, members. To the outgoing Board of Trustees, it was a pleasure working with you. We had challenges in making decisions. We had more lawyers, but now the criteria have changed, so it is now balanced. So, but decisions were made, and it was in the interest of the members. So I know that we all feel like you were married and now it's going to be divorced. Personally, I feel like that, and I'm physically here. I almost wanted to cry, but yes, everything has a start and an end. And it was really amazing working with the NMC management. As you have clearly heard in the explanation, we have the NMC management and we have the administrators. And the administrators, MedHealth, thank you so much. You were so much of a help, and you are always on point. You can just ask a question and the answer is flowing. You can even ask a question of 3 years back and you will be presented. They are competent. They are helpful. They are on hand. And Joanne, you have a good team that will support. Thank you very much, MedHealth. To all the presenters today, I was wondering what I will talk about investment and the financial statement, and you know, I'm by profession, I'm just a social worker. So I was like, wow, but it was concise, to the point, and even a layman could understand. Thank you very much. It was really a good summary of all the discussions and what is globally and what is locally happening, what is in South Africa happening, and the impact it has on the Namibian economy. And you know, I also learned something. I can now also narrate a certain bit. But thank you so much. And finally, I know that we all are sitting with a lot of questions. But some of us, we are also ashamed. We are in the shelf. Maybe I'm asking a stupid question or what. But I want to tell you one thing. There are officers, they have open door policy. Just call them if you feel like you don't want to write an email, walk in and ask them. Because every penny that you pay deserves an answer. You cannot be an unhappy client or a contributor, for that matter, and walk around while there are answers that can be given to you. And finally, enjoy part of your money at the back. And with that few words, meeting has been dissolved. I have the power. Good day.